Bulls and Bears, it is Tuesday, January 3rd, 2022, back with another dose of economic reality. So let's go to some financial economic news here. I want to give you my take on a few things, a few happenings here. And as I record this at the end of the trading day today on Tuesday, the Dow Jones down over 260 points. All major indexes in the red today. We've got the entire investing world hoping and praying for a pivot from the Fed to come in and cut rates. Rock bottom interest rates once again. The Fed's out there saying they're going to fight inflation no matter what, that no matter how many job losses we see, how much carnage we see on Main Street, we're going to keep rates elevated and even more rate hikes coming down the road. Normally in this type of environment where we have tightening and rate hikes, you would see also a sell-off in metals, and it's very strange. Gold and silver are up today, and actually silver is up to $24.18. Remember, it got down to about $17.50 in less than 6 months ago. So we're up almost 40% on silver for those that waited and bought the dip on the advice of this channel. I shouldn't say advice. I let you know what I was doing. I did buy that dip. Thanks to many of you for your support that allows me extra money here to invest to buy these things. This is what I did, and I went more heavy-handed when it hit 1750 range, and most of you know that because I've talked about it quite frequently. And now we're up almost 40%. So for those of you that were on that same boat, feels pretty good, right? Now that it's at 24, I'm not buying as much. I'll still add to my silver, what we call the stack here. I'll still add maybe 10 to 20 ounces a month, but not as heavy-handed as I was when it got down to the $17.50, $18 range. So congrats to those people that followed that same pattern. When something is going up parabolic, and I have to repeat this because I often see people asking me the question, what do I invest in? When do I invest? When something's going up parabolic in price, I don't care if it's a home, if it's gold, silver, precious metals, if it's a stock, I don't chase. That's chasing. You're trying to jump on the wave or ride the wave higher, and then you hope to sell at the peak or near the peak before it comes crashing back down. And it's very hard to do that type of timing. So what I do, instead of trying to ride the wave that's already went up, I wait for the bottom. And when it comes to stocks, I don't think the bottom's in yet. The bottom's not in because why? Because the reason stocks are selling off is because we're in a tightening period where the monetary policy is more restrictive. And what do big institutions, hedge funds, investment houses, what do? They want to borrow money for next to nothing, put it in the stock market, and when they all invest at once, that is enough to drive the market up just by itself, just with the low rates. And also, companies borrow money at low rates. They buy back their own stock with their profits, and they also go in debt and buying back their own stock, right? So all that has reversed now. And a lot of us are actually surprised that the market hasn't collapsed even faster and more fiercely than we've seen already. But we know there's other forces back there. We have the plunge protection team. We have the trading desk over at the Fed. We know what's going on there. So we're not fooled by these bear market bounces or dead cat bounces, as some may call them. I don't think it's a good time to be buying the dip right now. I wouldn't say this is even a dip. You may see a dip and then it goes back up. But as you've seen over the past 6 months, even when the stock market goes back up, it doesn't reach the previous highs that we saw during 2022. It's a downtrend. And until something big changes on the rates, I don't see that happening. I think things are going to continue to get worse. So not a dip buy in the stock market. Gold and silver dip buy, in my opinion. I'm not really buying gold at these prices, but silver was definitely a good opportunity for those that were patient. And that's why I say, hold cash, because cash is going to be king. Home prices have more to come down. Automobile prices, definitely a lot more to come down there as well. And those that have cash, those that are not going to have to finance these items are going to be in the best position. Why? Because if rates are higher, the cost to finance these items are going to be much more costly every month. Now, what's going to be happening in 2023? Well, I think we're going to see a lot worse of a situation here. More job losses, more layoffs, more people getting evicted, falling prices, which may be a good thing if you're somebody waiting to buy the dip on these things. But let's give you some predictions here of what's going to be coming here in 2023, several different predictions. The IMF, quote, we expect 1/3 of the world economy to be in recession. Even countries that are not in recession, it would feel like a recession for hundreds of millions of people. We talked about that earlier. Another one, Bloomberg. Economists say there's 7 in 10 likelihood that the U.S. economy will sink into a recession next year, slashing demand forecasts. Another, World Bank, quote, as central banks across the world simultaneously hike interest rates in response to inflation, the world may be edging toward a global recession in 2023. That's even more severe than the IMF. The IMF said it was going to be 1/3 of the world. The World Bank's out there saying basically the whole world is going to be in recession. So think about that. Why are higher rates going to cause a recession? Because low rates that were too low for too long, cause a fake economic boom. Things looked great on paper. Prices were going up. People had money to spend. When prices are going up, people make more money. Real estate appraisers, loan officers, real estate agents, home improvement stores. I mean, look at the economy, how it's so tied to just housing. And now a lot of these stores are going to go out of business. A lot of these agents are going to go have to look for new jobs. And that's just the way it is. I'm not happy to report that, but that's just the basis of a boom and bust cycle. Rates stayed too low for too long. And it's actually better now. I know it doesn't seem better if you're losing your job, but it's better than a hyperinflationary scenario. And hyperinflation, it's even a lot worse than it is here because everything costs even more than it is now. Everything's still priced too high, even now with the prices that have come down. But we're not going to see deflation and falling prices in the cost of food because it's not something that people can just say, oh, I don't think I'll buy food today or this week. You can say that about a house. You can say that about a car. Keep your old car running as long as possible. But food, we're not so lucky to be able to have that choice. Oh, I'm not going to eat this month. Not so lucky there. So rising prices in some areas, falling prices in others. Here's another prediction. Brian Moynihan, CEO, Bank of America, quote, we're going to have a shallow recession, unquote. Do you believe that? Well, what does shallow mean? People can drown in shallow water. So people have a different opinion on what shallow means. Mohammed El Irian, many high conviction U.S. recessions are immediately coupled with the assertion that it'll be short and shallow. He's probably responding to Bank of America. He continues, reminds me of the behavioral trap, transitory inflation. Does everybody remember that over a year ago? The inflation is transitory, but no one knew what transitory meant. Transitory just means not permanent. But not permanent could mean 20 years of inflation and then falling prices on the 31st year, down the road. Who knows what it means, right? So it's that type of language that you and I know what's going on. We're onto it. Larry Summers, his quote, my sense is that it's much harder than many people think to achieve a soft landing. Goldman Sachs, quote, economic growth is slowing. That was the CEO. When I talk to our clients, they sound extremely cautious, unquote. Charles Schwab, we have to take our medicine still, meaning a weaker economy and a weaker labor market. The question is it better to take our medicine sooner or later? You know the answer. Take the medicine sooner. The longer we wait, the worse it's going to be. We've already waited too long. Michael Burry, inflation peaked, but it is not the last peak of this cycle. Interesting. We're likely to see lower CPI, possibly negative, in the second half of 2023. The Fed will cut and government will stimulate, and we will have another inflation spike. Michael Burry. All right, we're going to wrap this one up. Congrats again to all my silver bulls out there. Thanks to everybody that comes here and supports this channel. Big love to everybody. Keep stacking. Bye for now. We'll talk to you soon. Peace.